Can see a few speakers in the room, so we'll just wait for them to be pulled on stage. If you're due to be speaking on the call today, make sure you click that request button and we'll pull you up on stage. All right, we're probably looking pretty good. What do you think, Matt?
Yeah, I think that's probably everyone. I don't think Jack is joining us, is he, from Velodrome?
Yeah, I think his travel plans put him on a time zone that wasn't as compatible as he thought with this call today.
Cool. Yeah, I think that's everyone. And so welcome everyone. Yeah, it's a really exciting call. We've got lots to discuss, and some great guests here. Yeah, we've got a few people from Velodrome Finance who have just been building lots of exciting stuff on Optimism and just growing. And then we've got a couple of guests from Beethoven X as well, who are just continuing to grow on Optimism after already establishing quite a decent community on Phantom. So we're going to speak to each of them on what they're building, what's happening. Both of these protocols will be integrated onto dHEDGE very shortly as well. And we're also going to go over the new DHT staking, which is super exciting, and really can't wait to get that rolled out. And we're going to do a bit of a live demo of what's working so far. And just to start off, we'll just sort of wanted to go through a bit of a market vibe sort of news check as well. We might bring on a bit of a blast from the past. Daniel Barr, are you around?
We can see Daniel's on as a speaker. You might have to unmute Daniel if you're listening to us. No, he might be away from keyboard. Well, while we wait for Daniel, Matt, we've got the Ethereum merge coming up shortly. How do you think that's being priced in at the moment? Do you think that's being fully priced into the ETH price at the moment, or are we still got a way to go?
I don't know. It's very hard to tell. So we had, I think, it was almost like a pre-run up, and then a pretty stark pullback. But it seems to have found a bit of a local bottom, and then it's kind of done a bit all right the last few hours. I think it's over 1,700 again from when I last checked.
Oh, we're getting back there. On the way back. It looks like, sorry, my notifications are blowing up. Are we pulling Jakey Boy on stage? I've got a connecting spinning wheel for him on my app at the moment.
Yes. Did he get pulled up? Oh, I've got Ermin as well. Hang on. I'll add you, Ermin.
Good old Twitter Spaces. Never.
Yeah, it's always.
It's always. Not every now and then we get a call that doesn't have speaker issues, but it looks like today's one of the good ones. Here's Ermin. Ermin, you're up on stage.
Yeah, sure. I'm not sure if I'll be able to sort of speak for the whole time, but yeah, from time to time I'll be able to jump in.
What's your take on the short-term market vibe at the moment, Ermin?
I don't know. I'm a horrible trader. No comment from my side.
Does anyone want to back it?
There we go, Jackie Boy. I think you can speak now, can't you?
What up? Can anybody hear me? I can barely hear anybody.
Loud and clear.
Loud and clear.
But I'm glad you guys can hear me. That's good. How's everyone doing? We got good. Velodrome. What happened to Daniel? Daniel come back, I reckon.
Yeah, he's in the room. I've got him as listener, but we're trying to make it through some market insights before moving on to welcoming our.
You know I'm no good at those, so we need somebody smarter than me for those market insights.
Up only, super cycle never ended, you know?
There we go. Here he is.
Yeah.
This is who we need.
No, it's true. It's true. I mean, you know, it's just like 2019. You just need to know which secondary market asset to pick.
I take it, Daniel, from your recent tweet that that secondary market isn't student loans in the US at the moment.
Probably not. No, I mean secondary market in crypto. The world outside of crypto is it's just it's a waiting game until it collapses, right?
Right. Well, in the meantime, all we can do is keep building, and as long as I don't know, I'm bullish post merge. I think there's a few opportunities that are going to fall into our laps over the next few weeks with the merge approaching. So I'm optimistic to see how the post merge future goes if we all if it's successful.
Yeah, I think so. I think it may be a bit of a slow burn, but I think it'll could be the start of the next sort of kind of like bull as well.
Would be interesting to see what the overall macro is outside of crypto as well, where inflation goes from here. If it keeps going up, traditionally stocks don't do so well. If stocks don't do so well, that can sort of turn into contagion into crypto also.
Well, that's
Yes.
probably a bit of a
I'm
mixed
curious
mood in the
about
room. Go. Sorry, Daniel. After you.
I'm curious actually. You know, there's this old fat protocol thesis that people or the hype du jour discussions they pull up, and I think that the fat protocol thesis used to be mostly what people like financiers would talk about, like less builders actually, more like what's the bottom line of where value accrues, purely number game. And then one thesis that I really like is the expansion of the fat protocol thesis that does go into the realm of the builders, which is the middleware or infrastructure layers thesis. So these are the things that I guess very timely now. For example, Tornado Cash front ends and GitHub and all those things that got put offline because they were eventually hosted on centralized services. Whether it's the decentralized Git repository version control, the Radical, or if it's decentralized clouds with Filecoin or Aleph, which I am exposed to, or generally, like basically IPFS has become, like I took the Tornado assets that I had out of IPFS front end that was kind of sketchy and feels like who knows if it's like phishing or not, but basically all this layer is really not served. And I think that if we're looking at where we're going to see a lot of growth, regardless of, you know, just the direct correlation to other asset classes, just purely from builders' perspective, I think the middleware and infrastructure layer is going to be very interesting. And who knows, hopefully dHEDGE as well will kind of like serve as that middleware from point of view of infrastructure for asset management, right? So yeah, that's my one of my current interests, infrastructure layer.
Yeah, which I think is what should help drive future development of whether people are looking at other L1s or other L2s to move to in the short term future. So I think maybe that thesis will help drive protocol decision in the short term too. But I think with the quick insights into the current market, and thanks everyone for sharing your thoughts. Matt, why don't we move through and welcome the guests from Beethoven up onto the stage.
Yeah, let's do it. So we've got Daniel and Suvlaki. Welcome, guys.
Hey guys, pleasure to be here. Thanks for the invite.
Hey guys, thanks for having us.
Yeah, great. Thanks for joining. I think maybe just to kick it off, would you guys like to, well, as an introduction to you both, dHEDGE has passed governance recently to integrate your Beethoven front end into our Optimism instance, obviously, and so we thought we'd get you on to give a bit of the community and give some of your short-term history and maybe some insights into where you think the protocol growth is going to come from for Optimism. So, yeah, keen to hear your thoughts.
Hey, yeah, sure. Thanks for the question. I think the Beethoven journey has been quite a both interesting and fun one. The protocol launched back in October last year, during the middle of a lot of the build that was happening on Phantom, and through that process, we were able to build like a super cool community and identify our brand, our Beethoven brand, and our Ludwig and the Ludwigs that come with it. And the whole concept behind Beethoven was looking at interesting technology that is out there and trying to build and bring that to DeFi to the best of our ability. And looking around, we thought the balance of V2 tech stack was something that we thought would be really super cool to see how far it goes. I mean, everyone knows Beethoven V2, everyone knows Balancer as predominantly a DEX, but the tech stack behind it is so much more, and it can build and scale and iterate into many different things. And later, Dan will take you a bit more into the technical side of like some of the new technology that we're looking to roll out, which is just the beginning of that. And well, when you guys reached out and you said, hey, we've launched this proposal on our governance about onboarding Beethoven for Optimism, like that was super cool for us, because in terms of dHEDGE, having your portfolio management capability together with some of the flexibility that Beethoven has, I thought it could be a very interesting combination. And I think for your community, like one of the things that Beethoven offers is, you know, you can create your own liquidity pools with up to 8 tokens in them, with variable weightings, with variable swap fees that you can choose. So there's a lot more flexibility if you're looking for a place to supply liquidity. We can provide that. And on the other side, we can also provide more of a stable swap environment that is akin to what everyone has become familiar with on Curve. And yeah, so like those two together, we felt could be really interesting together with what you're building out on your portfolio manager offering. Then in terms of like where we see like future builds happening and like with Optimism, yeah, and actually we did see that Optimism is a very exciting space to be. I think we're heading into this area where you know, not too long ago there was L1 wars. We're going to head into a world where there's going to be or a period of L2 wars, and the product offering, the way Optimism functions, the collective behind it was something that really appealed to us, and we decided that it's a potential path worth pursuing and seeing how well, you know, how if we come to the network, execute to the best of our ability, let's see what can happen. And that's why we're here. That's why we're there every day, just trying to add value to the community, to the wider DeFi industry, and see where it takes us. We're all here learning together, building together, especially in the current environment. And who knows, like DeFi is going to evolve over the next 1, 2, 5, 10 years. We very much want to be part of that evolution and where it goes.
Yeah, I think it's super exciting, all the optimism and, you know, all the layer 2 sort of solutions that's happening. I have an interesting question. How did you find, like, building on Phantom and then coming across to sort of optimism? Like, how were the sort of the challenges you sort of found, or did your community, were they happy to like switch over to using optimism?
Yeah, thanks for the question, man. It's definitely been a different experience, right? So we actually launched in partnership with Balancer on Optimism. So it's like this kind of, friendly fork becomes partner experience, which is really actually quite unique and interesting and really cool for us because we've already been building a kind of working relationship with Balancer Labs. And then also kind of like community crossover with Balancer to have this opportunity to essentially kind of like showcase what collaboration can look like has been really cool. I think there's kind of like quite differences between Optimism and Phantom. I think that at least in the time, I mean, it was a different period. There was quite a lot of hype around Phantom and there was quite a lot of community built. And as us being a kind of existing protocol, then migrating it over to Optimism or kind of also deploying there, it's definitely been a bit of a, I would say that our opportunity to capture community and share has not been kind of like, we haven't had the opportunity quite yet, but I think that kind of like with new technology that's going to start rolling out in the next month or so, as well as then emissions as we move over to VE-ball emissions, it's going to get quite interesting for us as well too. So I think this kind of next period for us is really going to be the opportunity where we're going to get the kind of like chance to showcase what is actually possible and what we're trying to bring to Optimism. And we're super excited about that.
Yeah, it's a good point you raise about, I think you used the term friendly fork or for a friendly partnership. I saw with your new, is it V2 vaults that you're issuing Bell rewards in addition to Beats rewards, sort of back to front. But how do the two tokens relate to each other now, given that there's a Beats and also Bell on the protocol?
Hey, yeah, that's a great question. Oh, go ahead, Savaki. Go for it.
All right. Yeah, I think it's just part of like our implementation and deployment plan together with Balancer Labs. I think like in general, if you look at specifically DEXs, they struggle to go cross-chain because, you know, unless you originally launch with cross-chain in mind, there's a very fine balancing act that you need to have on your tokenomics. I think for us, like before we took the decision to partner up with Balancer, we didn't want to undo all of the hard work on Phantom because we were unable to balance the economic rewards behind the deployment. And we came to this new and exciting approach where we don't the Beats going onto Optimism as rewards is a short-term solution just while we bootstrap the protocol and transition into Viva Gauge. I think the Balancer's tokenomics is much more catered towards growing cross-chain, doing a few other things, and that was part of the decision behind that. Well, we'll make Val in the long term core reward token behind the protocol. And so what we did was we came up with a fairly unique and, well, we think quite interesting plan in terms of how we'd bootstrap liquidity on the network and sustain that liquidity in the long-term future. And that is based on, so we have our Treasury DAO approved that will have 3 million beats available for the interim phase to award as bribe rewards. And then we have an agreement with the Optimism Collective that will take a fixed percentage of the fees generated on Optimism, and we'd use that one-for-one matching with OP rewards to continue to bootstrap and keep to sort of feed into a flywheel effect. And as the protocol grows, as TVL grows, as volume and fees grow, that means that the bribe rewards we can offer for VBAL holders to direct more emissions to the protocol eventually grows to a stage where, well, if our fees grow to a very, very large and successful, like then we can do quite interesting things, and there's no cost to whatever we built on Phantom. There's no cost to what Balancer Labs have on the other networks. It becomes it's leveraging our relationship with Balancer Labs to the extent that we can both bring the tech stack to Optimism without having too much of an impact on economics elsewhere.
Yeah, it does look like a super dynamic platform, and I think it'll bring a lot of value to dHEDGE managers, especially given the array of LP offerings that they'll have available to. I was just wondering if there's anyone else up on the stage that has a question for the Beethoven team, or if anyone on the call wants to chuck your hand up, then we're happy to take some questions as we get towards the end of the Beethoven conversation. So just please, put your hand up if you want to ask a question, or if anyone on stage has another question.
Yeah, and I think just generally for you guys, with the kind of onset of managed pools would become quite interesting as well too. With a managed pool, the idea being that you can rebalance, like there is a kind of smart contract or asset manager that has the capacity to reweight a portfolio. So add new tokens, remove tokens over time as well too. And I think something like that, like when it kind of starts to mature, actually gets quite interesting for dHEDGE as well too.
Absolutely. I think it's going to be very interesting watching different manager strategies evolve, given the tools that are becoming available on the protocol, of which obviously Beethoven and Velodrome will be key partners of in the short and medium term future. Yeah, I mean, personally, that's what I'm keen to see. Like, once these protocols become live on the platform, is watching what the community does with them, and then the knock-on effects that has to TVL and to community size and to the leaderboard as well.
Yeah, I think especially when you start to combine, different like DEXs with LPs, with lending and borrowing, via Aave, and then different like options and sort of futures as well. The strategies you can create can be quite complex and very different. So it's going to be very interesting to sort of see what path people choose, and then what becomes the most successful over time.
Yeah, and I think this kind of gamification of the process where you have the capacity to socialize it and people can then kind of like observe and follow and copy is actually so powerful and just like such a kind of untapped niche that I think is super exciting to watch develop.
There's a question in a tweet response to the call, which from rampy.eth. What's the TAM for social asset management? I'm not sure what that acronym is, TAM, if anyone can help me out with that.
I think it would be total addressable market.
Yeah, that could be that one. Cool, if anyone wants to take that. total addressable market for social asset management, is it growing in the DeFi space? I think it's absolutely growing. I think if you just look at the range of L2s and alternative L1s that are popping up with protocols operating on them, I think that's a proxy for the addressable market. And as that space, I suppose, opens up and becomes more accessible, that opportunity will just...
Yeah, they mean vehicles such as DAOs or even social tokens. I think the TAM is pretty huge in the trillions, perhaps.
Well, I hope.
I guess what we're seeing pop up is a lot of vault products. So a lot of vault products that specifically target one protocol or a couple of protocols. But the really powerful thing about dHEDGE is we support all these protocols, so people can come and they can build their own vault products on top of dHEDGE. And so instead of building all this extra infrastructure with regards to, allocating tokens, fees, all this kind of stuff, dHEDGE is already there. We already support all these protocols, and you can create vaults, your own personal vault, straight away, and all that will be managed for you. You can check your performance, you can have investors, you can manage your fees, and so I think that's something that gets overlooked a lot. There's a lot of vault products, but dHEDGE is kind of like a vault product on steroids, where you can create any type of vault. It's up to you.
See, X NFT, you have a question?
Yeah, thanks for taking the time to do this. One thing that I have a question about is regarding regulation. I mean, clearly, the governments are going to kind of step up regulation within DeFi, and being that dHEDGE is sort of like this asset management, a lot of strict regulation with regard to, how you can market these things, what kind of investors you can actually get. So how do you guys think about that going forward?
Who wants to take that one?
Do you want to share your thoughts?
Didn't mean to put you guys on the spot here.
Yeah, no, I mean, like it's
a good question.
It is a good question, right? Like, and I mean, obviously, one of the big features of the decentralized space is the lack of things like KYC and those sort of protections that we're not trying to, but it's just of the space we're in, is that decentralized nature of the platform at the moment is not subject to regulation. And so I think as that evolves over time, everyone's watching it to see what happens. But yeah, for the time being, dHEDGE being just an unstoppable software platform on Ethereum is something that is free to use for anyone who wants to interact with it.
Yeah, sorry, my internet's cutting in and out a little bit, but if you can't hear me, let me know. Yeah, so they're just smart contracts that they'll move on the blockchain, and when you compare it with like how a regular fund works, which is custodial, when you have a custodian, trustee, and there's humans along the way, sort of everywhere. This kind of works completely differently, but of course, each manager should sort of look at their own situation.
Yeah, that makes sense. Are you guys worried at all that the SEC is going to come in and say that these are basically kind of like unregistered, fund offerings? And, it's just, I come from kind of the traditional finance world, and like, if you run a hedge fund, like you like absolutely cannot market your product to, like randos, and, you have to be an accredited investor to invest in these types of products. So I mean, like it just feels like right now it's kind of small, you know, no one's really paying attention. But if it were to really accrue significant value, like, you know, just feels like there's kind of like a risk there. But maybe that's just too far down the road.
Yeah, we'd have to see where it goes. It's obviously evolving. Yeah, I mean, obviously DeFi, it's an issue in crypto in general, but for DeFi, it's like everything is there, everything's transparent. You know, a lot of these protocols are non-custodial. So the financial services licenses for TradFi products, you know, you couldn't really apply them in the they were kind of like a small box, whereas DeFi sort of really plays way outside of that box. So I think for the regulations to be effective, you'd almost have to have regulators have some rules around smart contracts, because it doesn't matter how good the paperwork is and how many, you know, people are sort of involved looking at it. Unless if your smart contract has a bug, the funds will disappear overnight. That's one of the biggest you know, risks really. That's just my feeling on it.
Cool. Thanks.
Should we move on to Velodrome, Jake?
Yeah, I think that's a good call. I think that's a good segue. Thanks for the question. I missed that user's user ID. Oh, XNFT. I think that's a good question. Yeah, so let's call up Velodrome to the stage. I think we've got Alex Cutler here, and we've got Tao from the team. Do you guys want to pop in and say hello?
Yeah, good morning.
Hey guys.
Yeah, thanks. Great to have you with us. And Tao, you sound like you're in the middle of the forest.
I sort of. It's kind of like the middle of the jungle. I've been in other interviews. I sort of like to walk and talk. It kind of clears my mind a bit. But I live in an area where there's a lot of birds, so sorry if you can hear them a lot. I feel like the mics tend to catch bird songs more than even voices.
That's great.
Yeah.
Soothing.
Tao, you know, crypto can be a stressful space, but whenever Tao has sort of the nature background music, you know, usually you have to like buy that kind of thing, play it in a spa, but Tao has just always got that beautiful nature sounds behind him.
It's a good point.
I try to help.
We get stuck in the desk in the computer all the time. It's good to actually get outside and see the sunshine. So that's good.
But yeah, guys.
Honestly,
so just in the same spirit of the intro we gave to Beethoven, would you like to jump in, and for those on the call who haven't had any exposure to Velodrome before, just share a little bit about your journey onto optimism and how you've used your OP grant distribution and some of the waves you've caused in optimism recently.
Yeah, happy to get things started. So if there is anybody here who is not yet familiar with us, I think probably one of the better ways to sort of summarize what Velodrome is that we are, of course, a DEX, but we are a DEX that combines some of the best elements from UniV2, from Curve, Convex, and a few of the basically most successful exchange models out there. So we are we originally started as sort of a fork of Solidly, which was Andre Cronet's last big project, of course, in DeFi on Phantom. We were a part originally of a DAO called VDAO that was kind of a participant in the launch of Solidly, whose sort of goal initially was to try to accrue as much voting power from Solidly as possible, kind of play the Solidly wars. But of course, if anybody here followed the Solidly experience, you will know that Solidly had a number of issues, right? And some of those issues were executional issues in the code itself. Key features like bribes, which were really essential to making solidly work, just didn't work. And then, of course, there were a whole bunch of sort of bugs in the experience as well. So being up close and sort of watching the solidly experience, I think we recognize both the potential of the model that Andre designed, and we were intimately familiar with maybe some of the executional factors that maybe needed to be addressed to give the model a sort of true test, right? And so once it became clear, that solidly was not going to be what we all thought it would be, and once Andre sort of left crypto, we sort of started to apply, this knowledge and expertise around solidly to designing a sort of forked version of it that addressed not only the sort of bugs in it, but also took what we learned in watching the sort of model play out and made some adjustments to things like emissions and token distribution and stuff like that. And as we were sort of like, designing, what a, 2.0 version of Solidly would look like, we had a ton of interest from other protocols, from other chains to sort of bring the Solidly model to their ecosystem. And of course, there was a moment there where Solidly forks were maybe a dime a dozen. But we basically, we wanted to find an ecosystem where that kind of base liquidity layer was really needed. And I think in Optimism, we saw a few things. One was just, that it seemed like the general narrative in crypto, the general forces of crypto were moving away from maybe this sort of Alt L1 phase into a focus on ETH L2s. And so I think very early on, we wanted to sort of focus there. And then in sort of looking at the emergent L2 environment, what we saw in Optimism was an ecosystem with protocols with real utility already building. So of course, Synthetics would be a great example of that, Perpetual Protocol, Thales, Lyra, right? A lot of really great protocols, but their biggest obstacle to growth was just depth of liquidity. They all felt that, they could bring far more activity to Optimism if only they could deepen their liquidity. So we started having conversations with the Optimism team. They reached out to us. They gave us a small grant essentially to bootstrap to build this redesigned Solidly that we eventually coined Velodrome, and then to launch pretty much coinciding with their token launch to ensure that, the ecosystem having its sort of boom moment had all of that deep liquidity. And I guess that's my high level overview. Tao, anything I didn't hit there?
No, I think you covered the right points of the launch process. It was a crazy period for sure. We really had to move fast to be on Optimism and deployed by the time sort of like the token launched. We knew that would be a great opportunity to capture some of that liquidity from the token. And it worked out at the end with some, of course, some hurdles on the way. But now we see Velodrome as being kind of like the top DEX for Optimism or for the OP token itself.
Yeah, and I know you did ask, sort of what are we doing with our Optimism grant, and I actually think that is a little interesting. And so, of course, the most tried and true way, right, to use incentives to build liquidity is just to sort of take whatever that incentive token is, emit it in some way to LPs. That boosts the rewards for those LPs to sort of bridge TVL over, deposit it, farm those tokens, usually dump them. And then, of course, a large proportion of that TVL, that those LPs actually ends up sort of rotating on the moment that somebody else offers, a better sort of incentive. So we wanted to do something different because, you know, our focus is not on sort of a sort of short-term, you know, pump of the ecosystem or pump of our own TVL, but is to really ensure that we are building the foundation for optimism, because we believe it will be a top ETH-L2. So we've essentially used our grant so far for two primary purposes. One is to basically provide a bonus to anybody who is choosing to lock VLO. And the reason we are doing that is because, I mean, especially in this sort of bear market time, the idea of a 4-year lock is a little bit scary. And even though, you know, one of the innovations of Solidly is that, you know, you can basically move those locked positions, you can move the VE NFT that they are in, you know, still a 4-year lock is a little scary. And so we wanted to be sure to basically provide a bit of a bonus for anybody who was making that kind of long-term 4-year bet on the Optimism ecosystem. And so that means essentially if you're earning those rewards, you know, that capital isn't going to be rotated out. You've locked that in there. And I think our average lock rate is well over 3 years right now. And what this also does is it reduces the cost basis for any protocols looking to acquire. So if you imagine you're one of the you're a new protocol that's looking to deploy on Optimism, you're sort of running the numbers yourself, right? We need to build a base of liquidity in order to do that. We probably want to do some combination of acquiring VE Velo so we can sort of vote for emissions for our pool, some combination of bribing, maybe some combination of adding our own protocol and liquidity. By virtue of offering this lock bonus, we've essentially reduced your initial cost basis. And I think most weeks that lock bonus has equaled, you know, something equivalent to like a 20 to 30% discount over the market price. And so it's been very, very successful so far. So that's sort of been the first major piece of how we're using our grant. The other piece, though, is very important in that it is essentially using OP to bribe key pools. And I think there's maybe two things to hit on that. One is, of course, that there are just pools that are ecosystem public goods. You know, think ETH wrapped ETH, right? Wrapped ETH USDC. That is just a fundamental bit of liquidity that benefits the entire ecosystem the deeper it is. And so we are using like a portion of our OP to bribe those public good pools to ensure that VE Velo voters vote emissions to them, and that sort of depth exists there for the benefit of the full ecosystem. And we have a few different pools that we think fall into that sort of public good category. SUSD, USDC is another one because so many protocols on Optimism depend on that SUSD liquidity. But the other thing we're doing is matching a portion of the bribes of any other protocols on the ecosystem. So if we've already sort of like lowered the cost basis of getting started on Optimism with that lock bonus, we're also lowering kind of the cost basis, or maybe better to say, like giving you more bang for the buck for every bribe. So any protocol that deposits a bribe, we will match that bribe in OP at a 50% rate. So, you know, rather than just depositing, let's say 10K of bribes, which, you know, Synthetics did on a few pairs this week, you're now getting 15K worth of bribes. And that value flows back entirely to VE Velo voters. If a protocol also owns VE Velo, they are then able to like vote for those bribes, recycle them, sort of stretch them even farther. And so that's just another way that without sort of directly incentivizing LPs, we're giving a sort of massive boost to economic activity. And of course, the benefit of doing this as bribes versus direct LP emissions is that direct LP emissions, you get a 1-to-1, you know, multiple on your dollar. You deposit $4,000 of LP rewards into an LP, you're going to get $4,000 worth of TVL, or the whatever that value will attract in terms of liquidity. With bribing, we're seeing a 3 to 4 times multiple on every bribe in terms of what kind of emissions it can produce and TVL it can attract. So it makes it really, really capital efficient to attract liquidity. But now I've rambled on quite a bit, so I will pause here.
Yeah, no, but you've been pushing a few visuals through social media that represent the increasing bribe side, the increasing bribe return over the last few weeks, which is quite impressive. And you've also got a pretty strong pipeline I've seen of new protocols looking to come on board and bribe their own liquidity. So I think I saw Beefy, Synapse, Lido. Looks like a strong pipeline coming up.
Yeah, absolutely. It's been super exciting to sort of watch the number of protocols bribing, as well as the size of those bribes, increase pretty steadily since we got this going. And yes, as you mentioned, we have a bunch of new protocols who are sort of inbound to the Optimism ecosystem, who are planning on bribing as well, and bribing in some big ways. And it's interesting because the average voting APR, and we think of voting APR as representing 3 things. One is the bribes that you earn by virtue of voting for a pool. The other is fees that you earn by virtue of voting for a pool, because 100% of fees go to VE/VLO lockers. And then the rebase that you get, an anti-dilutive rebase as a locker, those have averaged triple digits for weeks. And if you compare that to, say, Vodium, or the rewards that you can get on CBX CRV or locked CRV, you're looking at 40%, with the Vodium bribes. You're maybe looking at low double digits for CRV, and every week right now for VE/VLO lockers, it is triple digit rewards. And some of those have been, in the range of more 300%, 200%. And so if the engine of the protocol is VE/VLO, the engine has just been humming.
Yeah, I would add that it's a pretty neat mechanic, because if you think about it, as other protocols join Velodrome and start bribing, it sort of increases the yield of VE/VLO voters, which in return, of course, goes back to Velo, right? You can now buy Velo, accumulate it, and vote yourself and get that kind of yield. As Alex mentioned, you can get up to 300% some weeks. Which is also fun to do, right? Because you keep an eye on the different pools that are being bribed. You check the trading fees, and you can sort of like strategize around what's going to be the best pool to vote for every week. And that effect, kind of sustains the value of Velo itself, because now you have a vehicle to earn high yield if you buy it and lock it, which in return goes back to LPs, right? That receive the Velo emissions every week. So again, Velo, the whole value turns around as bribes come in. The value of Velo increases, and LPs get more rewards. TVL goes up, volume goes up as a result of TVL, and that comes back again to fees for VE/VLO voters. And again, it's sort of like a fun game. If you haven't tried it, I would recommend. Of course, I would recommend, but I would recommend that you get some Velo, lock it in one of those weeks where we're offering a lock-in bonus, and then try to vote around and see what kind of rewards you can get. And as I tell people, the 4-year lock, I agree, is sort of like forever in crypto. So the best strategy is to just think about the 4-year lock as a door to then get the bribes and get the trading fees. And just think about the lock as like being locked forever. and keep relocking every few weeks or so, and just use that as a user NFT to just get the bribes and get the fees, and sort of forget that it has locked tokens. And if it works out, then maybe in 4 years they unlock if you stop locking, and they'll be worth still. They'll keep their value, and I think they will, because I agree with Alex. Optimism is a great place to be, and Velodrome is set up as being a pretty decent player, as a liquidity layer within the Optimism ecosystem.
You touch on a good point. Would you like to take a stab at where Velodrome will be as a protocol in 4 years' time? Which
I think that's
basically
a
infinity in DeFi years, right? But it's
yeah.
The point.
I mean, if I can say, in general, Velodrome, there are other dexes, of course, on Optimism, and there will continue to be. So there will be other services provided. Uniswap, for example, is fantastic at concentrating capital. Liquidity providers can also play the Uniswap game. UniV3 provide liquidity on the ranges they think is going to be the most profitable, which sort of creates this mechanic where you can have high volume with lower TVL, because the liquidity is more concentrated. But what we've seen for Velodrome is that it can be a very, very effective tool for, again, new protocols launching their tokens, for stable swaps, and in general for anybody that wants to bootstrap their liquidity, because you have these tools like bribes. You can accumulate Velo and vote, and it's permissionless. So any new protocol can come in, launch their token. Eventually we will have a sort of like whitelisting process that will be controlled by Velo voters as well. So that would be the only sort of barrier for any protocol to get emissions on Velodrome. But again, if you want to accumulate and if you want to bribe your pools, you can do so. So anybody coming in can really quickly get TVL. This week we saw Synthetics bribing very strongly their SNX USDC pool. So we'll see that TVL popping up this week. Same with USDC as USD. And again, all stable swaps. When Lido comes on board, they're going to also use a stable pool, and we're going to see a lot of TVL going into that pool. So those are the sort of the core elements of Velodrome: stable swaps and new token launches, or protocols that have perhaps a budget to incentivize pools. They can get a much bigger effect by bribing, as Alex mentioned earlier, than by just emitting those rewards through Pool 2 or directly to liquidity providers.
We should also add, just in the context of Velodrome being integrated for dHEDGE managers, that in the short term, managers will only be able to, I think, LP and swap using Velodrome. The bribing functionality, as I understand, isn't part of the initial integration, but maybe somewhere down the line, if demand gets to a point, then we can integrate that. Ermin's dropped off, but Matt, I think I'm correct in that assumption.
Yeah, I think the problem with any lock in terms of a dHEDGE pool, you have to be able to have your investors exit at any time. So that obviously becomes a bit of a challenge. Like, it's one of the backbones of dHEDGE, so that any assets held can be sort of liquidated and be split up to give to the investors. So anything that's sort of locked becomes a bit more of a challenge. Not to say that it can't be done, but it just needs different sort of mechanisms involved in it. But congrats anyway, guys. I think you've done very well. And the sort of flywheel effect, as you sort of described, seems to be really sort of kicking off. And as sort of as you said, more protocols come onto Optimism, and then especially with sort of these OP grants, a lot of protocols are getting these OP grants, and then they're utilizing them on your protocol. So it just really sort of really just gives a jump to all that sort of TVL and that liquidity that you aimed to provide. So I think, congratulations, you've done very well, and it's sort of very interesting, all the the kind of new sort of tokenomics, and obviously the VE model is being sort of proven and been very popular, and it probably sort of leads into kind of our new staking as well, where we spend a lot of time working out of ways to, you know, get that long-term sort of commitment, while, you know, allowing people to be active on the protocol, not just sort of that kind of like set and kind of forget. And that, as you sort of described, Alex, that sort of mercenary capital where people just farm and dump the token until the next opportunity sort of comes around. So creating something where people are more invested, and it's sort of like that gamification, as you said. So I think, yeah, we can probably start to go over our new staking. What do you think, Jake?
Yeah, I think it's a good segue, especially given the fact that with the new DHT staking, the governance will be moving to Polygon and Optimism, and the DHT token will need a liquidity source on Optimism. So whether that's with Velodrome going through the bribe process as Alex described, then that's there to be used. So I think it's a good segue. And just as we move on, thank you, Alex and Tao, for your presentation. That was super helpful. We didn't go to the floor for any questions, so if there were any questions, just feel free to put your hand up, and we'll get to you before the end of the call. But feel free to do that. But yeah, Matt, should we move on to the onto staking?
Yeah, I think we had one person request earlier, but looks like they've dropped off. So sorry if you didn't get a chance to ask the question, but yeah, put your hand up again, and we'll bring you up, and you can ask your question if you're still there.
Meanwhile, for the next part of the call, we're going to try some multimedia. If you're on desktop, then jump into our Discord and jump into the community chat room, because we've got a screen share set up that has the staging UI for the new staking portal, which we're going to walk through on the call. So I appreciate Twitter Spaces as an audio medium, but if you are on your desk or you've got your a screen in front of you, then jump in our Discord community call channel, and you'll see a screen share as we talk through it. So Matt, maybe we can start with a bit of a background on the reasons why staking is being upgraded.
Yeah, good point. So yeah, staking staking version 1 for dHEDGE. It's been live for about, I think, 18 months. But, you know, we found it was very, like it's emitting the DHT token for not really participating in the protocol actively. So you could just, you know, have your DHT tokens, and then you just put them in a lock, and then you just every month earn your DHT rewards. And on top of that, we also had we still have a performance mining program. So that's where eligible dHEDGE pools that met set criteria would also be eligible for these DHT emissions. But we decided we need to completely overhaul this. So it's really more tied with, and what's also very topical at the moment is, you know, protocols having sustainable fees, and where the token holders are, you know, getting returns based on the protocol revenue, not just on the sort of governance sort of token. So with that in mind, that's what we sort of looked at ways to incentivize behavior that increases dHEDGE's protocol revenue. So the way that dHEDGE earns the protocol revenue is by management fees and performance fees on each pool. So that when a pool performs, the manager earns fees when they hit set like performance watermarks, and then a cut of that 10% goes to the protocol. So with that in mind, that's where we decided to overhaul. So it's more of a long-term sustainable program. So yeah, as Jake said, so we're moving from some ETH mainnet to both Polygon and Optimism, and basically this is in line with all the product development of dHEDGE is mainly on Optimism and Polygon at the moment, and sort of moving away from ETH mainnet just because of the fees sort of involved. So that all the governance will be on those two chains, and then a way to reward positive investing behavior. So the way we're going to incentivize this is instead of just holding just the DHT token and staking that, you'll have to hold the DHT token and stake that with dHEDGE pool tokens. So you have to be an investor on the platform as well, and then you're going to pair the DHT token with the dHEDGE pool tokens to create this, what we're calling a staked position. And then by doing this, it enables users to amplify the returns that they're going to achieve from their pool performance. And the sort of three main things is how the rewards are calculated is, so the amount of DHT that's staked, the dollar value of the pool tokens, the amount of time that's staked, and the performance of the dHEDGE pool. So you get a duration bonus and a performance bonus. So in this context, it's really designed, as we said, the utility of the DHT, and it's much more simple to earn governance power because it's just accruing linearly. So when you start staking, you earn VDHT, and that goes up after over 9 months. So at month 0, you have 0 VDHT, and then at 9 months, your VDHT will be 1-to-1 with your initial DHT. So for instance, if you staked 100 DHT tokens, after 9 months, your VDHT would be 100. And then that's the VDHT component is what's used to for your voting power for all governance decisions.
Yeah, so just to add to those points, Matt, I think the way that we are looking at the DHT staking program now is we're calling it boost staking, in that whatever returns you're generating from the pool token that you've paired with the DHT, those returns essentially get multiplied by an equivalent amount of DHT if certain conditions are met, and those conditions are a certain amount of time staked, a certain amount of performance from the pool, and a certain amount of VDHT accrued. And it's also important that it's only rewarding positive pools. So if you're in a pool that has gone negative, then there's no DHT accrued to be claimed for that position. So it is an up-only staking program.
And the other sort of difference in this as well is that the rewards, like there's a sort of the gamification of it. So if you want to get your rewards, you need to like claim it, but you to go back to that point. So if you had positive pool performance and then you decided to not claim, and then that pool performance went negative, then you would have the no accrued rewards. So it's really that active investing behavior to choose the best time to claim to get the most rewards possible. And so that's sort of why you need to obviously monitoring your position to sort of make a choice of if you should claim and start again, or if you should sort of maybe ride it out and maybe hope for a higher sort of performance. So like in an ideal situation to maximize your rewards, basically 3 things would happen. So you'll be staked for over 9 months. Your dHEDGE pool performance from the time you staked would be over 50%, and your staked DHT would equal 6 times your initial dollar value of your pool tokens. So we have this like 6 to 1 ratio to sort of maximize the value. So it's sort of tying a dollar value to the DHT. You can actually see if anyone's on the community call Discord channel. Jake is sharing his screen. There's actually a staking calculator. This is the test version at the moment, but it'll be very similar once this goes sort of live. So it gives you all the different information you can put in. So you can put in your DHT amount, what you expect your pool to perform, and then the time you're going to be staked, and then the dollar value of your pool tokens, and that this will tell you your expected DHT returns at that if all those conditions sort of get met. So the idea with this is to have, you can really play around with different possible results, like for performance or how long you want to stake, just to sort of see what your returns can be, so that it's much more sort of clear.
And yeah, appreciate that it's not the simplest program to get your head around. There are a few idiosyncrasies with it, which is why we've built out a few calculators in the new staking portal to help you make decisions around and help you to forecast what sort of returns you might be able to forecast based on certain pool conditions. So all of that's there to help users inside the user interface, which will be launched after the Blue Volcano release, which is about 3 weeks away based on current timings. We're looking at getting the contracts audited for this new staking program so that we have some extra comfort for users that the security is tip top on the staking program. And then when that audit's completed, we'll launch this program, hopefully in about a month's time.
Do we have any questions? This is probably a good point to go to questions in regards.
But one note with the program is that there's a variable in the calculation for an emissions rate, just so that we can have a bit of control over the emissions that are going out over time. The default emissions rate is 1, but for the first $1 million of locked DHT, either on Polygon or Optimism, the emissions rate will be boosted 50%, so that there's essentially a 50% bonus staking reward for the first million that comes across. I'm assuming that'll fill up pretty quickly because there's about 1.5 million worth of staked DHT on mainnet that'll be released around the same time. So as that DHT either flows to L2 or doesn't, then they'll be the ones attracting those rewards.
Yeah, I would expect it to go pretty quickly, and I suspect most of it will go to Optimism because that's where everything seems to be going at the moment.
Yeah, it'd be interesting to watch that. I think I agree with you, but I think there's still a pull for people who aren't spending more time on Polygon for whatever reason. But yeah, I think or certainly all the guests on the call this evening, or this evening for me, are predominantly Optimism or non-EVM chains. But with questions, yeah, feel free to put your hand up, or even are we monitoring the community call chat on Discord. Nothing in there at the moment. So I suppose with that, Matt, I think that was a pretty good overview of staking. I commend your effort. It's not an easy program to explain.
Yeah, I think like we've obviously spent many sort of months and of sort of a lot of planning and talking and discussing. And so some of it's like easier for us to understand. So, but I think it's like having this calculator and a bit of like we've got this the blog post that just went live yesterday as well. So that's another good material to go over to understand it a bit more. But yeah, along with this sort of calculator, so really users can play around with it to understand before they sort of commit to the new staking. But yeah, like any questions on this call, yeah, please put your hand up, or anyone later on jump in Discord. Happy to answer any questions or concerns you have.
And thanks again to the guests from Beethoven and Velodrome for joining the call today. It was great to have you on, and I'm looking forward to working with your protocols through dHEDGE in some of the pools that I manage. So it's going to be great watching dHEDGE evolve.
Thank you guys for having us.
Yeah, guys, thanks for having us. It was awesome. I look forward to see what the holds.
Thanks so much, guys.
Thank you.
Thanks a lot.
So I suppose with that, we'll close the call, head it back to the elevator music, and see you guys on the next community call.